Most people buy stocks basis tips as well as emotions, but the best investors buy basis intrinsic value. So in this video, let's see what is an intrinsic value, how to calculate the intrinsic value of a business, and understand it with a real Indian example. First of all, let's understand what is intrinsic value. The intrinsic value of a business means the real worth of the business based on all the cash flow that will generate in the future. Now, let's understand how to calculate the intrinsic value of a business. And this has 5 steps. Step number 1 is to understand the business in detail. Let's say we are actually calculating the intrinsic value of a software company in India, and it is generating 100 crores of profit this year, and it is expected to grow its profits by 10% every year for the next 10 years. Step number 2 is to calculate the actual profit of the company for the next 10 years. Like I said, it generated 100 crores of profit this year. If it grows 10%, it will generate 110 crores profit next year. And in second year, it will generate 121 crores of profit. Like this, you generate the profit for the next 10 years. Step number 3 is to calculate the terminal value of the business. So now we have calculated the future profits of the company for the next 10 years. But what happens after 10th year? The company doesn't die. So after 10th year, let's say we are selling the company to someone else, and the price of that is 10 times the profit of 10th year. In this example, our company generated 259 crores of profit in 10th year. So our selling price would be 10 times this, which is a 2590 crore. Step number 4 is to discount to present value. So now the money in the future is not equal to money today. What we need to do, we need to discount all the future cash flows to today's value. For that, we need a discount rate. Let's take a simple 12% discount rate, because that is the minimum expectation of the return that anybody can have when they invest in a stock. So discount each year's cash flow at 12% to find out to the present value. Also discount the terminal value. So if you discount all the cash flows and the terminal value to the current present value at 12% rate and add all of it, it will come to 1500 to 1700 crore of present value. So now we have calculated the present value of the company, which means if I am ready to buy a company, the full company, I will pay either 1500 to 1700 crore. But let's say we are going to buy only one share, two share. So to figure out what is the exact price that we need to pay for the single share, we need to divide the entire market cap of the company by total number of shares. So in this case, let's say total number of shares of this company is 10 crore. So we have figured out that the value of the company is 1500 to 1700 crore. So when we divide that by 10 crore shares, we get per crore share value of 150 rupees to 170 rupees. So the ideal price, the intrinsic value of the price is 150 to 170 crore. So now let's take a real-time example of TCS and understand the intrinsic value of it. So now it again has 5 steps. The number 1 step is to find out how much is the profit that it generated in the last year. Now TCS is a topmost software company in India, and it generated, let's say, 45,000 crores of profit last year. Now the second step is to figure out what is the profit that will generate for the next 10 years. For this, to calculate it, we should assume that the company will generate its profit at 10% growth rate for the next 10 years. Like this, you calculate the profit of the company for the next 10 years. Now step 3 is to figure out the terminal value of TCS. So now we already learned that the terminal value is nothing but selling price at year 10. The selling price is equivalent to 10 times of the annual profit at year 10. Now TCS, let's say it generates 1,16,000 crore profit in 10th year. Now the selling price is 11,16,000 crore. So if we calculate it, the terminal value of TCS is 11,67,000 crore. Now step number 4 is discount to present value. We had already calculated all the future cash flows. Now discount that at 12% rate and find out the present value, and add all the present value to find out the real value of the business today, which is the intrinsic value. So far we had calculated the intrinsic value of TCS. It is 8 to 9 lakh crore, let's say 8.5 lakh crore. So now to find the intrinsic value of per share, we need to divide this 8.5 lakh crore by the total number of shares that TCS has. Now TCS has, as of today, 365 crore shares. So if you divide 8.5 lakh crore by 365 crore, you will get 2,300 rupees. This is the intrinsic value of TCS. So now as of today, if you go to the NSE website and find out the TCS share price, it is approximately around 2300. So now we realize the intrinsic value of TCS per share is 2300 rupees. Before buying the TCS at 2300 rupees, we need to have a margin of safety, because we have made a lot of assumptions but it may not be true. So to be on a safer side, let's say we have 50% of margin of safety. So taking into that account, if we buy the TCS share value at 1150 rupees, we would make a good amount of money over the next few years. But if we buy it at 2300 rupees, which is the intrinsic value of TCS share, we may not generate any returns over the next few years. So it is easy to calculate the intrinsic value of any business, but what is not easy is to really understand the business and exactly calculate what is the profit that will generate for the next 10 years. And this is where most successful investors differ from the unsuccessful ones.